The question of competition for Tesla is relevant. We're starting the discussion of the innovator's dilemma with the first chapter about the disk drive industry. I'm going to go deeper into the chapter in subsequent episodes. Today, I want to raise a point of competition, which is part of the book and also a very important theme. This is the Not Even Wrong podcast. It's November 5th, 2020. This is the second episode of today. So no updates. We are staying at around 218% for the year and outperforming the market by roughly 201%. I want to just jump right into the question of competition. And there's one specific concern that is going up in my head, and it is the extreme stock performances of Chinese electric vehicle makers, Xpeng, Li, and NIO, and then there's a bunch of others that are not as prevalent. So NIO in particular now has a market cap of almost 45 billion. So these are real players now. And yes, you can argue about bubbles and all that stuff, but I just want to take it for what it is. It is a successful situation for them. And therefore, I think we should start discussing the kind of risks that Tesla could have from a competitive landscape and use the innovator's dilemma as a principal stack to analyze this situation. So this is the first episode. I assume it's going to be quite a discussion. So we're going to have several episodes about this. Today, I want to talk about one of the main learnings that Clayton Christensen had in the book, and that is that you have an innovator that becomes a dominant player, and then you have competition typically starting at the low end with products that are inferior, but they start getting better. And sooner or later, you see price competition kicking in. So the dominant player ends up innovating with quality, with service, but then the others keep catching up. And Christensen has the mudslide theory where you just have to keep everything together. And if you just stop to catch a breath or make one false step, you fall down. So this is the risk. This is what he is explaining in the disk drive chapter, which is chapter 1. And I want to relate this to Tesla. So today, Tesla, I think most of the market, if not everybody, believes that there is no competition. The German automakers have lost the race, actually in a classical innovator's dilemma type, and this is a whole other episode, why they lost the race. I think they lost the race for exactly all the reasons that Clayton Christensen explains why dominant players lose out to disruptive technologies. Then we have the American car companies, which were already weak before Tesla came to the scene, and now are, I would say, more totally irrelevant. They just don't have the DNA, the skeleton, the strength, the processes, the intellectual capacity to compete. We have the Asians, which are the traditional Asian manufacturers, which I would count similar to the American ones because they were always at razor-thin margins and not really running for profit, but more for some sort of dominance, market share dominance, things like that. They just don't have the DNA either to compete. So now we're left. So all of these ones, I would say, we don't have to be concerned because Tesla is not just disrupting them. Tesla is innovating so fast that they have no chance. And Musk said it several times that the moat that Tesla is building, if any, is going to be the pace of innovation. It's not going to be some sort of product, network, brand, none of these things, the traditional sort of more Warren Buffett type moats. It's just rapid pace of innovation. We are going to see better batteries, better artificial intelligence, better services, better charging, better insurance, better photovoltaics, better batteries, and it's all going to be wrapped up into one product. So it's going to be a little bit like the flywheel of Amazon. But having had all these conversations, and I think we agree with the market on this front, but we have to start thinking about the Chinese competition. The Chinese have a couple of things going for them. Number one, they are not legacy players. They started from scratch. They built the car from scratch, from nothing. NIO is an extreme stock market success this year. It went from 2 to 40. So this is better than Tesla, and we have to take it seriously, no matter what the bad rap they have, the management turnaround. There's a lot of reasons not to like NIO, but no matter what, there is a stock which is going up, and the market cap of NIO is now, I would say, close to BMW or something. So we just can't ignore them, and we have to think that they're for sure are not technology leaders, but they could become the kind of toy that grows into the market and starts hurting Tesla. So let's think about this. First of all, Christensen talks about this extensively, and we're going to come back to that when the chapters actually, when we read those chapters. Right now, we're just in chapter 1, talking about disk drive industry and how the disk drive industry went from dominated by IBM to competitive and extremely competitive, and then a total destruction, sort of Schumpeter type destruction, where almost 90% of all the companies went bankrupt, but then a few survived, and the pace of innovation was so strong that even the survivors were struggling to keep up. So this is not where we are right now with Tesla. Where we are right now with Tesla, I would say, is there's a technology leader which has created a new market and disrupted the old car industry. That's where we stand. So now the question is this leader going to be able to fend off the new competition, and in particular the Chinese competition? Now, what is the Chinese competition? The Chinese competition typically, if you take XPeng, Li, and NIO, those are rich Chinese people who founded a company around a couple of things. They're not vertically integrated by any means, but they have a few things going for them. And let's put all the relationships, the government influence, let's put that aside, because I don't know about this, nor do I want to do research about this, because I think it's unknowable. So these are not interesting problems in a David Deutschian way. Finding out how NIO is connected with the government, I think, is futile. So let's just assume that every company in China is considered a valuable competitor from the perspective of the government and from the perspective of the customer. So it's just up to the company to deliver. Let's also assume that the Chinese government and customer is not going to do anything unusual as far as Tesla is concerned. So yes, they're going to have a bias towards their own products, but they're also going to choose the better product. Yes, they're going to have a bias against foreign manufacturers, but Tesla is the only manufacturer which is not locally founded, but has a local presence, and therefore has a kind of a local feel. And I also conjecture that, particularly in the Shanghai region, Tesla is considered a local manufacturer, very similar to, let's say, Starbucks being considered a local company in many places, where local managers, local employees, local regional managers run the company. And the fact that there is a stock trading in the US, and that the owners, which by the way could be also, you can buy the stock, so it's not really owned by the US either. So we see Tesla more in that light, and also the market dynamics. So let's put all of the sort of guanxi, the relationships, the connections, the licensing, let's put that aside. Of course, those are risks, but we don't want to think about them right now, because we don't have knowledge or any indication that there is something we can do about these things. So let's just focus on what are those companies. For example, NIO is a completely unintegrated company, and therefore we from the get-go believe that they don't have a chance to compete with Tesla, because if you're not vertically integrated in a new disruptive market, you simply don't have the cost structure to you don't have the cost structure, and you don't have the rapid pace of innovation across the value chain, which allows you to continuously improve your products. Now, yes, they can rely on third parties. We know from talking to industry participants, they talk to traditional car suppliers, they talk to even steel manufacturers and factory manufacturing and things like that. So there is definitely a good relationship that they have with companies. But in the end, if you're not vertically integrated, you're buying from other people have margins, those margins pile up. You just don't have a chance to compete with a vertically integrated player. In my view, that's you can prove that mathematically. The only chance you have, and that's what NIO is right now, is you can deliver a product at a roughly competitive price, which is way inferior. That's what NIO is. They have the battery swap technology, which maybe helps in China. I've heard people say that that's a good thing, particularly in big cities. I don't think it's an interesting concept because there is also liability issues connected to that. So I wouldn't give NEO a particular advantage on that front either. So to summarize, NEO is an inferior company on almost every level: managerial depth, processes, and vertical integration. But they're able to deliver a product which is barely viable, but it's viable and it's at a competitive price. So now the Clayton Christensen dynamic kick in, which is a typical investor now would say, well, this is not serious. An inferior product, they're never going to be able to catch up with Tesla. The risk is that they are. The risk is that they get better, that they, through their supply chain, start getting better and better and better and getting closing that margin with Tesla. And that is a risk. I'm not saying it's going to happen, but it is a risk. One reason why we believe that it's not very likely is actually Battery Day. Battery Day pushed out all of that for another 5 to 7 years. So whatever people were catching up with, now they have to rethink all their supply chains. And imagine how difficult that is for NEO now. They have to rethink their battery supply from first principles. We know also from the news flow that other battery manufacturers are producing batteries along the lines of the new Tesla technology. It is very possible that they will catch up with Tesla and be able to produce batteries at similar efficiency and scale and energy density. But then we still have the vertical integration. So it's a little bit like Apple. Everybody can buy flash memory and processors, but Apple has a couple of things going for them which just make it impossible for Chinese makers such as Xiaomi, for example, to compete. And actually, I want to use this as a segue. Xiaomi was considered, back in the day when we were Apple shareholders, way back, long time ago, 2010-ish, Xiaomi was the big concern. Xiaomi, Samsung, but particularly Xiaomi. The Chinese are coming, the barbarians are at the gate, they're going to destroy this market. It is a disruptive technology which is going to get commoditized. This was the narrative. What really happened is that Apple took a lead, particularly on the chip manufacturing side, on the chip design side, and just kept being so way ahead of everybody else that nobody ever caught up. In fact, all these Chinese makers, they are reduced to irrelevance. But that is not the case with the cars right now. Again, the cars are successful. BYD is another company which has done very well this year. I forgot that one. Based in Shenzhen, has been around for a long time. So we have to assume that the Chinese car manufacturers are slightly better than, let's say, Xiaomi or people like that. Now, again, if you boil it down to the risk is, in a Clayton Christensen sense, that those inferior toys, those inferior products that we don't take seriously, just start creeping up to Tesla. So the question, and let's assume that that is going to happen. The Chinese are going to get better and better and better. Even if they start at a low base, they're going to get better. So then the question is, how fast can Tesla run away? And that is the big question that we have to keep discussing. These are the kinds of things we have to keep looking for within the Tesla ecosystem. What are you doing to keep being ahead of competition? I know Musk likes the narrative of we want to, actually the mission of Tesla is to increase, accelerate the transition from fossil fuels to sustainable energy. And therefore, you might think that it's part of the mission to spread the technology as much as they can and have other manufacturers produce cars. I don't think that that is really what Tesla wants, particularly Elon Musk, because the risk if everybody now starts competing for market share in electric cars is that electric cars become an inferior product and actually the ICE cars take over again and become valuable products and viable market solutions for higher segments. That would not be a good situation for Tesla. The way Tesla can win this transition from fossil to electric is by dominating the market until all the ICE cars are dead, and then maybe at some point give up some market share to these so-called toys. So a conclusion, my point here is that Tesla cannot assume now that if there's a lot of other electric car manufacturers that is good for their mission. They have to dominate the market. They have to generate wealth for themselves and for us shareholders and keep dominating the market until they get to those 20 million and start replacing a few percent of the global fleet every year. And then maybe they can start giving up some of the components within the value chain and start opening up the market. But that's not the point right now. We don't. Right now, Tesla, to be clear, is actually doing exactly that. They're vertically integrating on every level, almost down to the mining. They're integrating on the AI side, of course, which is a huge advantage that they have relative to any other, even Chinese manufacturer. They're integrating on the chip side, which we believe will be all integrated. I spoke in the episode today, in the first episode of today, about the insurance product, which we believe is not just another additional service. It is part of the Tesla offering, because we believe that insurance coupled with AI together can become one product. The question is, because you're having an algorithm drive the car, and the algorithm is fed into the insurance algorithm, which is pricing the insurance. So if you don't have to use a lot of imagination to see how these things merge together into one product, one algorithm which drives the car and prices the risk of accidents. So in a sense, there we're looking at an innovation stack which is developing in front of our eyes, which is of course increasing value for shareholders, value for customers, and also increasing the gap between Tesla and the competition. So to summarize, we believe that the Chinese competition needs to be taken seriously, that the Clayton Christensen concept of little toys that start creeping up in the market are to be taken seriously. We cannot ignore them, and that we have to continuously push Tesla to continue with rapid innovation and continue opening up the gap between competition, not just the German car manufacturers, the US and the traditional Asians, but also the new Chinese manufacturers. So far, they're doing that. So far, even though the Chinese manufacturers have gained a lot in market value, we believe that Tesla is still on safe ground with rapid innovation and building out an innovation stack which is unpenetrable. And therefore, we're still very happy with the situation. Thank you.